Tapering: how, why, and when the Fed does it, and impact on financial markets. Tapering modifies a central bank's monetary expansion policies initiated to stimulate an economy. During a program of quantitative easing, a nation's central bank may buy asset-backed securities from its member banks, injecting money into the economy to boost recovery. Tapering is initiated after the quantitative easing policies have stabilized an economy and may include changing the discount rate or reserve requirements. In the United States, the Federal Reserve will also reduce its asset holdings. How tapering affects financial markets. When central banks pursue an expansionary policy to stimulate an economy in a recession, they promise to reserve their stimulatory policies once the economy has recovered. Continuing to stimulate an economy with easy money once a recession has eased can lead to inflation and monetary policy driven asset price bubbles. Tapering is the first step into the process of their winding down or withdrawing from a monetary stimulus program that has already been executed and deemed successful. Communicating openly with investors regarding the direction of central bank policy and future activities helps to set market expectation and reduce market uncertainty. In the case of quantitative easing, the central bank will announce its plan to slow asset purchases and either sell off or allow assets to mature, thus reducing the amount of total central bank asset and the money supply. Central banks can hesitate to pull back on their QE policies due to taper tantrum, where investors and financial markets overreact to a reduction in stimulus from the central bank. For example, announcements of impending central bank tapering have typically been met with sharp rises in government bond yields and drops in equity markets, creating an incentive for monetary policymakers to delay plans to unwind their balance sheet to avoid harming the interests of their constituents in the financial sector. Federal Reserve tapering and financial asset. As the COVID-19 pandemic emerged in March 2020, the Fed implemented an aggressive quantitative easing strategy, injecting more than $100 billion in asset purchases, and by June 2020 established a QE program to purchase $80 billion in Treasury securities and $40 billion in mortgage-backed securities per month. The Fed started tapering its purchases in December 2020, and by the spring of 2020, the economy showed significant strength and a cost of living surge. In June 2022, the Federal Reserve changed its monetary policy direction to manage the threat of rising costs. The Fed revised its position after 2 years of an easy money policy, ending its policy of low interest rates and significant intervention in the bond market. The Fed also put in place a plan to reduce its balance sheet of nearly $9 trillion in asset holdings it accumulated in recent years, mostly Treasury and mortgage-backed securities, the beginning of the Fed's money tightening measures. When does tapering begin? The Fed implements quantitative easing as one of its tools to stimulate the economy. Like all economic stimulus programs, QE policies are not intended to be permanent, and after the desired result of an economic stimulus program have been achieved, those policies must be gradually rescinded. If a central bank changes into operation too fast, it can push the economy into a recession. If a central bank never eases its economic stimulus policies, there may be an increase in inflation. Tapering is the period where the stimulus has worked and before an accelerated expansion toward inflation. What is the difference between tapering and tightening? Tight or contractionary policy is a course of action by a central bank to slow down economic growth, constrict spending in an economy that is seen to be accelerating too quickly, or curb inflation when it is rising too fast. The Fed tightens monetary policy by raising short-term interest rates through policy changes into the discount rate, also known as the federal funds rate. Thank you.